Mr. Kathpalia also joins us, and it's not planned, just a coincidence that we are talking to Mr. Kathpalia also after he's got an extension from Reserve Bank of India. Kathpalia sahab, the discussion was not planned. It just happened by design that we have Sanjay and we have you after that.
Okay.
So
hi Nukunj.
So what should we start with, sir? Hinduja Group increasing stake, quarterly numbers for IndusInd Bank, or the fact that you got an extension from RBI? You can choose. As anchors, we normally choose. Today, it's the other way around.
No, you can decide the order and we can answer all the questions.
Great. Let's start with quarterly numbers. Let's understand the environment. It's been a good environment for banks, but is this as good as it gets? Do you think going forward the base effect and the cost of liability could have an impact on margins and credit growth could also slow down?
See, the system credit growth may slow down, but you have to look at each organization in a very different way. If you look at us, we have domains. Our domains are coming from cyclical lows. So for example, the CV cycle or the microfinance cycle or the diamond, they've all contact businesses and were affected during COVID to a large extent. What we've seen in the last 12 months on the CV cycle, or we are now seeing with the rural economy recovering in the rural banking segment, and I think the diamond starts coming up with the lab diamonds coming into play, I think you will see a very tremendous growth. And I think we are very, very comfortable with the growth projections which we've given, 18 to 23%. And that is where we think we should be able to do the growth. In addition, we have consumer businesses which are growing at about 35% because they come from a small base. And we are entering into MSME and SME, which have actually grown by 8% quarter on quarter. So I think we have very well diversified of portfolio with domain specializations, which I think are coming from cyclical lows for us to give the confidence to the market that we should be able to maintain the growth which we are seeing in the market.
All right, morning Mr. Kathpalia. Let's also discuss the outlook when it comes to your overall deposit growth, which has been robust in the quarter. The cost of deposits have been higher by about 34 basis points sequentially. How much higher can it go from here? And would you say that to a certain extent that this deposit growth is eating into your margins to a certain extent?
So let me first talk about the margins, and I think you will understand. We have maintained, if you look at last 8 quarters, our margins have been very steady between 4.15 to 4.25, and that's been our guidance, and we've been able to maintain. The book is such that our mix of the book gives us the margin. We have a very well balanced book between fixed and floating. So 51% of our book is fixed, 49. What happens is you see stability of margins, and that is what you're seeing in this bank, a very stable margin scenario between 4.15 to 4.25. Having said that, our cost of deposits are higher than the market because we are in a granularization journey. I believe that a large balance sheet needs to have granular deposits. We continue to focus on granularization of liabilities. We are today at 43% as per Basel III. We want to get to 48 to 50% by the end of 3 years, which means that there are 3 or 4 things which we will do. We will continue to expand our branches. We will continue to give right rates to our clients. We will launch a digital proposition called Indi, and we will do another very innovative offering called community banking. And I think very differentiated approach, very differentiated capability to continue to create liabilities of what extent we need to manage our growth.
But just on the net interest margin bit, what I find a bit intriguing is the fact that while other banks, other peers are talking about a bit of a contraction, you continue to maintain there is going to be an expansion there. Could you talk to us about what kind of expansion can we see in the net interest margin? What's the sustainable level, 4.5 thereabouts?
No, we said that our guidance for the parent cycle 6 is 4.2 to 4.3. So we will be in the margin range of 4.2 to 4.3. We were in the margin range of 4.15 to 4.25. I think we should be able to deliver 4.2 to 4.3. Please understand, while the fixed rate growth will give me the margin, the floating rate book, if the interest rate changes, will have a decline in the interest rate. So I think it's a well balanced book, but because the mix is changing towards consumer, that's why the margin expansion will happen.
From your standpoint, if you have to really talk about the credit cycle for next 2 to 3 years, do you see a mid-teen kind of an credit growth and a possibility of very low NPAs? Is that a possibility for next 2 to 3 years? Can investors be reasonably sure, whether it is IndusInd Bank or SBI, but in general, the trend is going to be strong and NPA concerns are not going to be there?
So I think we are in a benign credit cycle. However, for the bank, if you look at it, the contact businesses have had some flows. So if our gross flows, if you look at it, they're still on the higher side at 1.7 to 1.8%. I continue to believe that you will see the gross flows moderating, specifically in the MFI side, where we had 600 crores of gross flow this quarter. You would see that going down to about 200 crores next quarter, because our 30 plus has gone down to 1.1%. So I think over a period of time now, with the contact businesses stabilizing and the restructured book declining to less than 1%, I think for IndusInd and for the industry, I think the next 12 months at least, I cannot talk about I think the next 12 months you will see a benign credit cycle in the industry.
Are you happy and also disappointed that Reserve Bank of India gave you an extension, but instead of 3 it was 2?
See, you can look at a glass half empty or half full. The board applied for a 3-year. I think RBI did its due diligence and found that it is appropriate to give 2 years, and we have to live with it. So I'm happy that it's not 6 months or 1 year. So and 2 years gives you enough time to what you want to do.
Clear the area, sir. Now 1 year, 10 months are left, which means the board will have to again apply for another extension for you soon.
Yes, within the next 18 months they should apply.
Okay.
Mr. Kathpalia, we understand that RBI has also allowed Hindujas to increase the stake in IndusInd Bank. When is that expected to happen? Any timeline that you can help us with? Is it likely to happen in FY24 itself?
See, first of all, I think there is a little bit of a communication or a misunderstanding out there. I think there are circulars which the regulator has issued, which allows promoters to apply for a stake rise. As our promoters too have applied for a stake rise and filled up the forms which were required to be filled in. There is no communication from the RBI or any approval from RBI as of now that they can increase the stake. It's in the process, and as and when the process gets completed, will we know what is the status of that application.
So whenever the approval goes through, and Hindujas will be about to increase their stake, there are 2 ways you can increase your stake, sir. I'm just breaking it for the viewers. You can buy from the open market because they have cash, or you can, or the bank can do a fresh approval. What would be the route?
So I think you should ask them this question. I think if the past precedence is anything to go by, Hinduja, the IHL has always subscribed to the primary issuance, have never bought shares in the secondary market.
Need capital. Would the bank go ahead with the primary issuance, because bank does not need capital?
So that is the question. You're absolutely right. I don't think we need the capital, because our internal accruals are enough to take care of any growth right now, which is the organic growth. If there is an inorganic growth opportunity, and we are evaluating an inorganic growth opportunity, is when we may need capital, or our board feels that we should raise capital because the CET1 at certain point they want to maintain above 16% or 17%. But otherwise, I don't see us raising capital in the next 4 to 6 quarters.
Raising capital in the next 4 to 6 quarters, because for now you don't see any inorganic opportunity, etc. But my colleague Ankur broke the story yesterday that there could be organic expansion that you could be planning and foraying into the MF insurance as well as broking business. Could you clarify that or confirm that for us? What's the rationale, what's the strategy, what's the timeline of getting into these new businesses?
Again, these are para-banking activities, and para-banking activities does require the regulator nod for us to get into this. We don't have the regulatory approvals as of now to get into the para-banking activities. As and when we get the para-banking activities, we will come out with a strategy as to how we want to take the para-banking activities forward. Yes, like you rightly said, we like the brokerage space because we are into the wealth management. We like the non-life insurance space because we do a whole lot of non-life insurance for our partners because of the vehicle finance business which we have. And I think we like the AMC place because it's very capital efficient.
Kathpalia, have you made those applications to the regulators? What stage are those applications at? Anything you can clarify in terms of the timeline for us?
We have not made the applications. We are in the process of doing the due diligence before we make the applications.
We always compare banks with the industry average, and for a bank of a balance sheet size of yours, what to your mind will be the growth for the industry per se, and then if you can indicate to us what your growth would be? Because I distinctly remember, so the criticism which shareholders were or analysts had about IndusInd Bank was that, why is it growing slower than HDFC Bank when the balance sheet is much smaller than HDFC Bank?
It depends on the type of businesses which you do. I think, Nukunj, it is very easy to say. We were in contact businesses, and our contact businesses, which is 43% of our portfolio, got affected during COVID. And we were not able to access those customers there. That's why the slowdown happened when buses are not plying, when trucks are not plying, or you cannot reach your microfinance customers. You can't see growth in those segments. I think, having said that, I think the credit growth in the system would be around 13 to 15%, and we have given a guidance of growing at 18 to 23%, and that's what our guidance is. And I believe that IndusInd will always grow ahead of the public other banks because A, we come from a small base, and B, our domains are coming from cyclical lows, and we believe we want to continue to maintain or gain market share in these domains.
There is a buzz in the market when the stock of Karnataka Bank, Federal Bank, it goes higher, your name is connected. Why don't you clear the air once and for all that you will not buy any listed bank and there are no plans?
You can continue to comment on every rumor, but that's not what the style we use. I think if there is anything which we are doing, I think it will be an open thing in the public. We're not doing anything right now which I think it requires us to make any comment in the public.
Clock back and take the clock forward. I'm going to take the clock back for the benefit of our viewers that there was a high growth period for IndusInd Bank, then came the LNFS crisis, then came the 2018 slowdown. You had to re-engineer, retool your balance sheet, your growth and everything else for risk management. Then came the COVID and the repair phase where you were able to really grow and build upon your microfinance business, your diamond business. See how much I trying IndusInd Bank. Your microfinance business and other things. But next 3 years, how will it be different for you? Sir, before you answer the question, you'll agree with me that I track your bank very closely.
4 things, I think.
You'll agree with me, I track your bank very closely.
Yeah, Nukunj, the new way to track the bank is how much have we diversified. So if you look at microfinance business now, the microfinance business was a JLG business. We have now turned that into a micro banking business. So what you are seeing now is the bank has diversified into what is called as merchant acquiring business, where 4,000 crores of book has been created, and this in the next 3 years will be 15,000 crores, and which comes at a yield of about 23 to 25% and a fees of 4% with a current account balance sheet. The ROA of this business is 7%. You will also see launch of liabilities, you will also see launch of home improvement, and you will also see launch of scooter loans in the deep rural area. So I think a microfinance business will grow at 25 to 30%, but the JLG portion of that business will become 55 to 60% rather than 90%. So I think that's one change which you will see in the business. The second change which you will see in the business is diversification of the vehicle finance. And you would have seen that already. in LCV, where we were 1% market share, today we are 9.5% market share, and we believe we will be 12% market share and will be a domain leadership for the bank in the next 2 years, and we believe that we will be number one next to Chola in the LCV business. We have launched used car business, and we believe that in used cars we are early entrants, and we believe we can make a very good blueprint in that. That also comes at a 15.5% yield in the business, and we are already doing about 600 crores a month. I want to take it to 1,000 crores. I think the way we've diversified a tractor portfolio, we're already at 9.5% of the tractor. I think we have done different things. On the diamond, we're taking a community approach and not a diamond approach. So I think community approach means that we will finance the ecosystem, which is from the employees to the vendors, to the real diamonds, and to the outside diamond, to the gift city. I think that business will become a very cohesive business in itself. So what you will see, growth will come from domains, but I think the growth will come in a very diversified manner. Then I think our cards and PL has been a very slow business, and I think you've seen the scale up. We've launched mortgages. You will see a book of rampant growth in the mortgage because it lends stability into the book, and we're scaling up our SME and the MSME segment to become 35% to 40% of our book from 20%. So I think the bank has enough levers to show the growth, and I think the bank will become very well diversified and will continue to be in line or ahead of the market in the growth phase, and in the domains we will gain market share.
I'm going to wrap it up with just one final question, a leaf from your answer. The three differentiating businesses of IndusInd Bank. Number one, microfinance business. We know there is a rural slowdown. Second, the auto finance business. You spoke about the numbers there. You've got a very large book there. But that's one space where luxury cars are selling, two-wheelers are not selling. And the third, in a sense, some would say is the diamond finance business, where we know that America is in a recession and the diamond exports may not be that great. So these are three differentiating businesses of yours which do have a macro tailwind. Am I right? Headwind, not tailwind, sorry.
Not at all. You'll be headwinds, but I think not at all. If you look at the diamond business, I think that's where the ecosystem is coming into play. And while US may be in recession, I think we are seeing a huge demand from China and UAE for our diamond business, and you will see the growth happening. And of course, the government is supporting the growth of the lab diamond, which is also a very, very differentiated offering. On the microfinance, I've said we're becoming a micro banking, and I think while rural economy is recovering from a slowdown and is coming up, but I think the differentiated and the well-to-do businesses in the rural area, which is the KCC, which is the scooter, the personal mobility, as well as the lending against warehousing, I think is fantastically doing very well, and we believe that that's a huge opportunity in that. On the consumer side of the business, mortgages business will continue to grow, and on the vehicle side, we've diversified the book in such a way that no stoppage or no recession can actually stop. In the month of April, which is the worst month, we still are seeing the disbursement which we would have seen normally in the month of October, November, December. So I think the diversification of our book have really helped us make sure that we continue to build the scale and continue to see the scale in these businesses.
Well, yeah, always a pleasure to have you on ET now. And must say, sir, we've been talking about meeting for coffee and for a dinner. Let's make it happen this time, sir. I'm going to send you an email and perhaps take some time.
Yes. And you've forgotten to say one thing. I think the bank produced the best ever results for the quarter.
Sir, ye thi jordar awaaz. Best ever results and that real kadak awaaz to end the show with.
Yeah. Thank you so much.
All right, let's